Ayo, guys, it's Money Online. It's yet another day here at Money Online. I'm feeling good. I'm feeling good. Keep the love, guys. Keep the love. Keep the love. Keep the love. Keep showing the love. So today we are looking at things to consider before trading forex. So if you are a beginner to forex trading, you may find that there are a number of things about the market that you may not be familiar with. So to help you understand this market better, here are some of the things that you need to consider before you trade in forex. Number one, the currency pair you're trading in, guys. You need to be familiar with the currency pair you're trading in. Different people have different pairs they like, the favorite players they like. You may find somebody likes trading pound USD, others gold, others euro USD, others USD Canadian dollar, like that. So people have different favorite pairs. It depends on how you like, or like how you have studied a certain pair. You cannot trade all pairs, guys. You need to pick at least like not more than 3 pairs to trade. If you trade very many pairs, at the end of the day you'll be making losses because you will not know how they behave well. Mostly if you're a beginner, you need to find the best pairs, at least 2. If there are many, 3, only 3 pairs, because different pairs behave differently. So you need to know the behavior of each pair, and you need to go even beyond that. So if you have known how they behave, you also you need to know what happens in that country, like, because the news like they do affect the pairs. News falling, like if you are trading, let's say GBP, that is pound USD, you need to know the news that are happening in the United Kingdom. You need to know the news that are happening in the US, so that you know when the news, because those news, the fundamentals, they affect how the pair moves. So get familiar with the pairs you are trading in. You need to choose those pairs, study them, how they behave, that you know how they move, guys. You need to study, and all that one you can do it first with demo trading, guys. You study the pair you are trading, start with many, but then at the end of the day choose your best pairs, which will make you get money. That pairs you trade will just kill you, guys, will just make you blow accounts. So you need to choose the best pairs to trade in. The second thing to consider is the spread. We looked at the spread in our previous videos. We talked about spread. So if you haven't checked the link in the description below, I'll leave the link to the whole playlist of beginner's guide to forex trading. We talk about spread, the bid, the ask. So you need to know, because for you to know the spread, you need to know the ask price, the bid price. You will get the difference. So spread is very significant in forex trading. So it's basically the difference between the sell price and the buy price. So that's the spread. But in that video we go deep. So you need to know the spread, because before you go into, you place a trade, you need to know, because sometimes it depends on the market. When there are times when the spread is high, okay, you might find the spread may indicate lower liquidity, or vice versa. So you need to keep on the spread, because the spread affects the time, like it affects the price. Let's say if you're going to place a trade, a spread, if let's say you're trading gold maybe at 1990, and if the spread is too much, let's say a spread of 10, that means instead of 1990, your trade will be put at 19, actually it will be put at 2000. So it will be a spread of the difference of 10. That's too big, man. That's too big. So you need to to see the spread, the tightest spread, the smallest spread. That's when you put your trade, guys. And also it helps you to choose which currency, because there are certain currencies which have higher spreads, guys. So spread, consider the spread. Point number 3 to consider is the leverage. So leverage, we also talked about leverage in our previous videos. We have looked at all these things. We go deep into details. So check the link in the description below to that playlist where you talk beginner's guide to forex trading. Forex trading for beginners. So leverage is essentially like borrowed money. It can be your best friend, that can be your enemy. So if you, let's say, you choose a higher leverage will mean that even with your small account, your small money, you'll be able to place very many trades. And if the trades go they go in your direction, you'll be making money. But it will, since leverage will make you to be having capital, you see, as if you're having a lot of capital, but in the actual sense, if you are in a losing trade, you will be blowing accounts day after, every day you'll be blowing accounts. So it's important that you choose a lower leverage, mostly if you're a beginner, because if you choose a higher leverage, it will entice you to put very many trades, and then those very many trades, if they go against you, will blow your account within seconds. If you want to know more about leverage, check the link in the description below. When you go to my channel, Money Online, you'll get all the things. We talk about leverage. It's a topic on its own. So you need to understand the leverage. What is leverage? Another thing, your trading strategy. You need to know the forex trading strategies. There are many forex strategies you can consider when you trade in currencies. Like some people are scalpers. Those are just short term. You just go in, get that move, get the pips, move out. Or you can be a day trader. You trade just day, you put your moves a day, 24 hours. You may be a trend trader or a swing trader. So those are the strategies you need to choose. Are you going to be a scalper? Are you going to be trading just a day trader, or you trade trending, or you swing trader? So there are very many strategies you need to rely on based on the market movements and your trading objectives. So you need to choose different strategies. We are going to look at the strategies of forex trading in our upcoming videos. So guys, just hit the subscribe button so that you don't miss out. Another thing to consider is your trading plan. A trading plan is a set of rules that define your trading approach and risk management. It should include your entry and exit strategies, position size, risk management rules. So what plan are you having? Or what plan do you use? You need to come up with a plan. Say, I only risk I plan I will be trading just 3% of my account. That's what I'll be risking. Position, risk management, all those fall into your trading plan. How do you plan to manage your risks, not to blow your accounts? So when you have your plans, make sure you stick to your plans. You need to come up with a trading plan. A trading plan will help you to secure your account. Another thing is trading psychology. Successful trading requires a disciplined and patient mindset. You need to be able to control your emotions and stick to your trading plan even during periods of uncertainty. Even when you're losing, if you put much emotions into trading, you will lose, guys. Because imagine you are in a losing trade, you'll be emotional, you'll want to go back for revenge trade. You will lose, you'll say, let me go, let me trade in this one, I'm going to get it. So you put in a lot of emotions at the end of the day, the more you insist, the more you'll be losing. So what do you do when you lose? Relax, calm down. Trade, like you'll trade another day. Otherwise, you'll be blowing your accounts, guys. This is something you need not to underlook, guys. Emotions make people lose money in forex trading. You'll be there losing. You'll want to go back. You'll say, I need to get more money. Like, I need to replace this money. You go back in there. You lose. At the end of the day, you will lose your plan. Your strategies, you will lose your strategies, you will go off your strategies, go off your plan. You just be placing orders, you lose, you go back. So you need not to be emotional. So you need to trade, like you need to control your emotions. Trading psychology. So briefly, those are the things that I would want you to consider, like to consider before trading. We talked about the currency pairs, the spread, leverage, trading strategies, trading plan, and emotions, guys. Those are the things, as for now, you want you to consider before you start trading forex. So hit that subscribe button, guys. I'll be back with more videos. See you in our next video, guys. I sign out. It's Money Online.